For the first time since COVID, the Federal Reserve has cut its benchmark interest rate. The half percentage point cut is being called jumbo in financial circles. But a lot of questions remain, and we're live with Erik Krom, president of Clear Creek Advisors, a Denver-based financial services firm. Good to see you again. How are you? I'm sure it's an exciting day for people who kind of follow this stuff closely, who rely on interest rates for so many different things. What does it mean for the average person who maybe isn't buying a house in the next couple of months, who maybe isn't buying a car in the next couple of months? What does it mean for me?
Yeah, absolutely. Thanks for having me. I think really there's three kind of general impacts that we're looking at. First is borrowing rates. As you said, that will be important for home buyers. We don't expect anything to translate right away, but I would expect interest rates to come down, and that will affect borrowers. Obviously, it's a kind of a double-edged sword for savers, because on the other side of that, savers are enjoying and have been enjoying good yields for the first time in quite a while. And unfortunately, with rates coming down, that's probably going to impact them for the negative. We probably will see CD rates and savings rates come down. And then, of course, the big question is what it's going to mean for the economy, the markets. And obviously, so far, so good. The markets have responded well, and everything seems to be going good so far, but we don't really know what that long-term prognosis is. I think ultimately the market got what it expected, and so right now we're seeing a positive response.
Well, and what's interesting too is I know the interest rates for mortgages actually started going down a couple of weeks ago, and they were saying, well, they're bringing the rates down in anticipation. So has most of the correction already happened, or do we normally see even more correction after the interest rate actually drops?
Yeah, it's a really good question. I mean, I think, like I said, generally markets are looking forward, right? 12 months at a time. They have an expectation of what's going to happen. When things happen within the expectation, they respond well. Obviously, if things are worse than expectation, for instance, I think if the government or the Fed had cut 0.75%, that might have signaled more worries about recession. So we still don't know what the impact is going to be over the next several months. But again, I think to your point, that the interest rate change was expected, and so there was already an element of pricing it in well in advance.
And are we at the point, with this half a percentage interest rate drop? I mean, it's pretty significant, but is there any reason for people to take action? I mean, it's obviously way too early to do any sort of refinancing for most people, right?
Yeah, again, I think you have to be patient. It takes a while for these things to manifest. I believe Greenspan was famous for saying when he was Fed president, if you understood what I said, I didn't do a good enough job of explaining myself. You saw that yesterday, where Powell was, really cautious to make sure that even though this was pretty aggressive up front, to make people realize that that was not showing cards in terms of what we could expect in the future. I think the market does expect, roughly another 50 basis points or 0.5% through the end of the year. But again, if you think about going into 2024, we were under the expectation that there was going to be a lot more aggressive policy already at this point. And then new data came out, they changed their tune, they switched things around. So I think they're taking a cautious approach. They'll look at what happens next, and I think at this point it's not particularly actionable. But I do think it's a change in the trend of monetary policy, right? We have seen the trend in one direction, and the market expects this is the end of that trend, and we're starting something different.
And more cuts to come is what it sounds like is almost certain at this point. Erik Krom with Clear Creek Advisors, we appreciate your time. Thank you for helping us to break some of this down. As a lot of us heard the news and said, okay, what exactly does that mean for me? I think that's the tough question sometimes to answer. Thanks, Erik.